Hey guys, wanted to come on here today. I'm getting several phone calls and text messages today about the credit score requirements on an FHA loan. There's a lot of information going out there here lately about the 500 credit score and how that works. Like most people don't know. So yeah, a lot of lenders, a lot of people are out there saying we can go down to 500 credit score, which is true. With an FHA loan, minimum government imposed credit score is 500, but it doesn't come at no cost. So everyone's familiar with 3.5% down on an FHA loan and how that works, but you have to have minimally in that case a 580 or higher. We're not talking about that. We're talking about 579 and lower. So when it comes to the 579 and lower, the 500 credit score, uh, you're automatically going to have to go with a minimally putting down 10% on the loan just to be able to get us going. So there we go, already making it a little bit harder, I guess you could say, to get this loan and make it work. There's also a few other things in there that you have to take in consideration. There's they call them compensating factors, and I'll tell you a couple of those. Like our qualifying ratios on a normal FHA loan is 55% debt to income ratio when it comes to all of your debts as housing and everything. When it comes down to this 500 to 579, we're going to have to start looking at a different ratio. Like we can't go over 43%. So that already decreases how much your client can be approved for. So that's going to go ahead and make it a little difficult, especially say in this market where, or in this day and time, where housing is a little more inflated than it was, say, 4 or 5 years ago, when an affordable home was, in the 125s, 150s. Now we're looking at an affordable home in the 200s to 250s. So let's think about that. So our debt to income ratio has gone up or down, so it reduces how much we can do. We have to have 10% down, makes it a little bit more difficult. And then say cash reserves. What are cash reserves? We're going to have to run our system and see like what your approval looks like. That's going to show us like whether or not there's going to be reserves required on any loan. But in this case, we're going to need cash reserves. It's just how much are we going to need? 3 months, 6 months, or whatever. So a reserve is your payment, your house payment times the number of months that we are required to have based on our underwriting findings. So, multiple things that go in there was a caveat when it comes down to it. So, when we're talking to our clients, make sure that we understand like what of our credit scores, what of our requirements, make sure that what we're talking about is going to be something that's feasible for the client. We don't want to just pull them in just because, hey, we got this score, this $500 or 500 credit score product out there. We don't want to give false hope. So be sure you talk to your credit professional or your loan professionals and let us look at the situation, assess it. If we're looking at a client that's maybe needing down payment assistance, talking about a 500 credit score as a minimum requirement may not be the best option. So if y'all have any questions, please give me a call. I'd love to talk to this a little bit more in detail with you guys, but give me a call, 205-863-5231. If you have any questions, I'd be more than happy to answer them for you.